Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. Forever is a long holding period, but I think that's the goal for any investment that you make. I'm a buy and hold investor, and so I would like to just hold any stock that I buy for decades. And there are three that I think stick out right now as companies that I don't have any intention to sell anytime soon. That is Axon, Apple, and Spotify. I want to dig into why today. My name is Travis Hoyam. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube and check out my newsletter, Asymmetric Investing, in the show notes. I'll actually link to a deep dive I did on Spotify as well. And I want to start with a chart that I'm going to show consistently with all three of these companies. The first one is from Axon. And you can see that this has just been a phenomenal growth machine. This chart only goes back 5 years, but the growth story really goes back a lot further than that. It's a company that started with tasers, added body cameras, and then has added software as a service on top of that. Really become a very sticky business in law enforcement and is now starting to generate really good margins, could be very profitable, but is actually pouring a lot of money back in both product development and then sales to actually grow the subscription fleet. Long term, this should be a very profitable company because right now they're focusing on growth. You can see that blue line, price to earnings ratio, over 100. That's a little bit misleading because that's not the focus for the company. What I would focus more on is the purple line and the growth that you see there. But also notable, Axon is free cash flow positive. So this is not a company that's going to need to return to the market and ask investors for more money. Very sustainable business, very profitable business. And what I like is that it's now a platform. I don't know how you would disrupt Axon as a business if you're trying to get into this market. Any company could potentially make a body camera, but then you'd have to build the cloud services and the first responder infrastructure and the dispatcher and the artificial intelligence tools they use. The body cameras are now integrated with tasers. When you pull a taser or a gun, the body camera will actually turn on automatically and record 30 seconds earlier. There's all kinds of tools that Axon is building that really makes it a no-brainer for law enforcement agencies and really difficult for any competitor to come into that market. So given that really strong position, this is a company that I just don't see going anywhere. Love their growth story, love the potential profitability. I think they will turn that on soon and really start to grow the bottom line. That's why this is a stock that continues to be a great hold in my portfolio. Apple is a very similar story. Not necessarily the same growth story from Apple because Apple grew a ton for the 20 years prior to this chart. But now this is really a free cash flow story. They have the platform, they have the iPhone, all the accessories, the Mac, and people to continue to come back again and again. Once you're in the Apple ecosystem, it's very difficult to leave. That's why the company can generate the kind of free cash flow that it does. Nearly $100 billion in free cash flow over the past year. I don't necessarily see that growing at a really rapid rate like it has for the last 20 years. But that's even okay because the company is using that money to buy back stock and pay a small dividend to investors. The question right now is that ecosystem going to be disrupted? And I simply don't think it is. The smartphone in particular has become the perfect device for consumers, fits in your pocket, it's powerful enough to do almost anything. Apple is integrated with its chips, its software, its hardware. That gives it better performance than a lot of smartphone competitors. And like I said, the ecosystem ties all of its products together. So people continue to spend a little bit more as you buy things like AirPods, maybe a new VR headset starting next year. Maybe the iPhone brings you into the Mac ecosystem. This is a very powerful platform to be in. I don't see it being disrupted anytime soon. As a result, there's just no reason to sell a really strong company like Apple. Spotify kind of falls in between these two. Not quite the same growth story that Axon has been, not the profit machine that Apple is, but a very established company in audio. The leader in music, it's now the leader in podcasts, and it's still growing out its user base very rapidly. 20% growth in the most recent quarter in the number of users using Spotify. I think it's really established itself as the go-to name for everything audio. And that's only going to help its finances. CEO Daniel Ek has talked about the fact that they're negotiating with record labels to increase the premium subscription price for Spotify. Some of that money will be passed to those record labels, but that should help Spotify increase margins a little bit. At the same time, Spotify is improving its advertising business. So targeted ads that are just inserted into what you're listening to, whether that's music or podcasts. Spotify plays kind of a Google like role in that business. Should be very high margin as they start to scale the advertising business, but it's still very early on in that growth curve. So the ad business in particular could grow at a double-digit rate for the next decade potentially. Spotify is free cash flow positive, so it has plenty of money to keep the business going. Management has cut operating expenses over the last 6 months to try to improve that profitability. And I think at the same time, Spotify's moat has only gotten better. The company has fended off a lot of competitors, and it now has the scale to be the go to name in audio. If that continues for the next decade, this could be a company that simply no one can compete with in the audio space. I love that positioning for Spotify. That's why this is a company I have no intention to be selling anytime soon. So the three stocks that I covered today are Axon, Apple, and Spotify. What do you think about those three? Leave your comments in the comments section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.